within 24 to 48 hours after the presentation. Also, if you have any questions during today's presentation, we encourage you to submit them, and we'll address as many as we have time for at the end of the presentation. If that question is somewhat complex and we need more time to answer, we do promise to follow up with you for those. So let's go ahead and take a look at today's agenda. I will begin by doing introductions to Dunn Solutions Group. From there, I will turn it over to today's presenter, Cory. After which we will discuss any questions that you might have, and we'll also be looking at a demonstration of Avalara today as well. So let's get started. Dunn Solutions is a digital commerce and business transformation consultancy focused on delivering velocity to our clients. Velocity is achieved by the combination of both speed and direction. Dunn Solutions helps our clients achieve speed by automating business processes and direction using advanced analytics. Our teams align with organizations to optimize their unique processes and help them discover the most profitable routes to business success. Dunn Solutions has a long history of delivering innovative business technology solutions to companies. We are headquartered just outside of Chicago and have offices in Minneapolis, Raleigh, and Bangalore, India. Our offerings fall into two practice areas. Our application development solutions feature portals, e-commerce, and content-managed websites, mobile application development, and custom application development. And our analytics solutions feature analytics and BI platforms, as well as data warehousing and data integration, along with IoT and predictive analytics. Thank you for allowing me to introduce you to Dunn Solutions. I will now hand over the presentation to Cory. Welcome, Cory.
Thanks so much, Megan, and thanks to Dunn for hosting us. So my name is Cory Kraft. I am a partner sales manager here at Avalara. My focus is on our SAP Hybris channel, most specifically. I've been at Avalara for about 3 years and in the SaaS software space for about 9 years at this point. This is my wife, Samantha, and my son, Max, in the picture here, and my contact information here for any questions. I'll also have this up again at the end of the presentation, so don't feel like anyone has to rush to write that down right now. So I want to go in today, and I'm going to take this in a number of parts. I want to go over a broad overview of why compliance is challenging for transactional tax, indirect tax, however we want to frame this. Most of the presentation today is intended to give you something to think about. And I want to give everyone the opportunity to maybe learn something that they hadn't considered. Really what we're in the business of doing is eliminating barriers to growth with regard to compliance. And I want to highlight how we do that, why customers choose to partner with us specifically. And hopefully this gives you an idea of some of the value we may be able to provide to your businesses specifically. So I'm going to start out by giving a little bit of background here. So a majority of the states every year project budget shortfalls. This has been the case since the 2008 financial crisis. It doesn't really show too many signs of abating anytime in the near future. So states are pressed for revenue. In 2009, the National Conference of State Legislatures, in conjunction with the International Council of Shopping Centers, commissioned a study to estimate the lost sales tax revenue as a direct result of remote sales or online sales. This was originally commissioned in 2009. It's been updated a number of times since then in terms of refreshing and updating that data, the most recent in March of this year. And the current estimate is somewhere close to $30 billion in estimated lost revenue in the form of uncollected sales tax on remote sales. That's a pretty big number when you consider how many states are so pressed for revenue. So this is something that's attracted the attention of the state legislatures. It's a big chunk of money that could make a huge difference as far as their state budgets. And consequently, it's led to a rapid increase in the complexity and variability of sales tax legislation across the country. And so that takes a lot of different forms. Some of the main points that I'm going to talk about today are the expanded definitions of nexus, which, if you're unfamiliar with the term, refers to the obligation to collect and remit sales tax in a particular state or jurisdiction. A dramatic increase in the number of auditors and resource allocation to departments of revenue to go after this perceived lost revenue in the form of uncollected sales tax. Certain states like Texas and Michigan are adding dozens and sometimes even hundreds of new state auditors for sales tax in the case of California as a good example. And also what I'm going to call creative legislation. Many people are familiar with broad pieces of federal legislation that have been considered in the past, such as the Marketplace Fairness Act or the Remote Transaction Parity Act. What many of our clients are less familiar with is the fact that those federal pieces of legislation are pretty much dead on arrival as things stand today. So what the states have done is taken it upon themselves to modify, tweak, and stretch their definitions of things like nexus and the way that they're requiring businesses to comply with various requirements. A very recent one and one that we're talking a lot about with our customers are mandatory use tax reporting requirements. This is something, I'm not going to get into too much of the details of this on this particular call. I'm happy to talk about it individually with anyone, but Colorado pioneered this, and it's essentially a way to essentially put burdensome requirements on out-of-state sellers, even in the absence of a requirement to collect the state sales tax. So things are getting very complex. And what this essentially means, and I'm going to keep coming back to this idea of eliminating barriers to growth, because that's really how I like to frame what we do. All of this complexity creates barriers to growth in terms of channels you may want to pursue and places that you may want to go to market. The list of business activities that you may choose to engage in that can directly contribute to creating exposure for you in particular states or an obligation to collect and remit is getting more broad and more varied. So the traditional understanding of nexus as a physical presence, a full-time employee, a physical location, et cetera, it's broadened substantially to include things like 1099 contractors, affiliate partner relationships, trade show attendance. Drop shipments is another big one that we talk about as customers are thinking about their fulfillment strategy and how to make it more cost effective and compete with channels like Amazon, be able to deliver that type of very, very quick access to a product or service that customers are coming to expect. There's a lot of options out there for expanding your business. The unfortunate truth of that is that those options are carrying with them more and more implications as far as compliance requirements. The second piece is just going to be understanding the taxability of what you actually sell. For some customers, this remains fairly simple. If what you sell is you're going to consider it tangible personal property, it's going to be taxable anywhere where you are subject to sales tax. But that's getting, again, more and more complex and more varied. There are thousands and thousands of product and service categories that are going to be subject to special tax treatment at either the state or the local level, depending on where you're selling. These are some of them. And a lot of these industries, consequently, are some of the industries that we have a very high concentration of customers. We are actually a good example of this. Our product is a SaaS software solution. In the state of Colorado, what we sell is not taxable at the state level, but it is taxable in the city of Denver. So when we have a customer that purchases our solution, we have to be able to understand that at a state level, we don't apply Colorado state sales tax, but we do need to know that that rule subjects our service to sales tax within that jurisdiction of the city of Denver. So that's one good example. So to build on that, and we're going to come back to Colorado here in a minute because it's an excellent example, but the image that you see on the screen here is a visual representation of one aspect of our tax content, which is jurisdictions. There are over 12,000 sales tax jurisdictions in the United States. They can all have their different combination of rates, taxability rules. the jurisdictional boundaries shift, new jurisdictions are created, old jurisdictions are eliminated, and this is all a reflection of the political climate and conversations that are going on in a given state at a given time. So it's constantly varied, it shifts around. Some data here on, you combine these numbers, you end up with millions upon millions of possible tax combinations when you factor in all of the rates and rules that might apply. I mentioned we'd come back to Colorado. So if I zoom in here, and we're going to zoom down to Colorado, which is admittedly an extreme example, but it illustrates how complex this can get. This right here is an actual snapshot of, this is real data from our solution, from our jurisdictional map. So at this particular address here, there's a tax rate of 9.25%, but right down the street at a different house, that tax rate becomes 4.75%, because it's a completely different combination of jurisdictions and relevant rates, even though you could probably literally see one house from the other in this scenario. So I bring this up because still today, an overwhelming majority of customers are managing sales tax using some form of a zip code-based rate table. And that is, they're either purchasing or doing their own research, but they're getting tax content or rate content based on zip codes. All of this that you're looking at right here is all going to be in the same exact zip code. So there's a lot of different rate combinations. Sometimes there can be up to 6 different rate combinations in a single zip code. And that's for a simple reason. Zip codes are determined at the federal level, and they have absolutely nothing to do with sales tax jurisdictions, which are determined at the state level. What we've done is create a technology that can zero in and determine tax at a rooftop level. So we can capture all levels of taxation that are relevant at a rooftop level address and ensure that you're not only assigning a very accurate tax rate so you calculate the right amount for your customer, but that you have that tax apportioned appropriately, because that's very important in filing your returns accurately in states that need you to report that liability based on local jurisdictions. The final piece of this that I'm going to mention today, which we've talked about the jurisdictional rates and product taxability rules, is finally understanding how do you source the tax. In a lot of cases today, it's not just as simple as, you know, here's my warehouse and there's my customer. You might have a corporate location in one spot, a fulfillment warehouse in another, and a customer in a third location. You might have one product being shipped from out of state into California and another being shipped from within the state at another warehouse. So how do you manage to actually apply taxability? Because there are going to be some states here that, as long as you're actually shipping within the state's borders, they make it fairly simple. They're called origin-based states, and it's exactly what it sounds like. You calculate the tax based on the point of origin for that shipment. Pretty simple. There are a couple states, like California and Texas, that get more complicated because they can be a combination. You might have to calculate a couple levels of taxation at the origin, and then depending on what you're selling or how it's being delivered, you may have to calculate additional taxes at the actual destination. So a great example would be in Texas, someone purchases a home entertainment system in a store location, and then an installation service is actually also purchased, which is delivered at the customer's home address. That's going to be one of those scenarios where there's going to be mixed sourcing. And then the rest of the states are all destination-based, which means you have to know exactly what the combination of rates and applicable tax rules are in the location that you're shipping that product, whether it's interstate or intrastate. So this all gets really complicated. These sourcing rules are part of our content base. So it's one of the things, in addition to rates and taxability rules, that our customers no longer need to worry about understanding or maintaining or applying at an order entry level. So starting to bring this all together, what are the things that managing sales tax or indirect tax compliance actually impact from a business perspective? Well, you're making accurate tax determinations on invoice or attempting to do so, and this is really a customer service issue. You want to make sure that you have tax accurately calculated or not calculated on a particular invoice. There are some instances, such as a good example, which I'm going to show you in a little bit here, would be clothing and apparel in New York City. Any single item of clothing and apparel under $110 in value on that item should not be taxed in New York City. Customers in Manhattan know that. Customers that buy a lot of clothes understand that they're subject to that tax exemption. You want to make sure you get that right and that sales tax isn't showing up. So that takes work and thought to make sure that you have that correct. You're also keeping up to speed on changing and updating this content as you become aware of changes. And so that's going to impact resource allocation, both within your finance team. Your IT team is often going to be involved in updating tax tables within your ERP or commerce platform. And then you're keeping accurate records to ensure that your organization is readily defensible in the event that you come under an audit. So do you have easy and quick access to all of the detailed information that auditor might want to see? This is going to be, have a direct impact on your efforts at risk reduction within the business. So altogether, once you've added all of that and then also completing your reconciliation on a monthly or quarterly basis and filing your returns, ultimately, the biggest impact is on growth and profitability. None of these activities that we've discussed so far are revenue generating. They are mandatory compliance activities that generate no value for the business, but can create risk if done improperly or incompletely. A great analogy for this is payroll outsourcing, which is very common today. Wasn't so common 30 years ago. Today, I think the last number I saw was about 60 to 65% of companies in the United States outsource payroll. Among our customers, that number is about 85%. And it's because the service that we're providing is very, very similar in terms of our business model and our value proposition. We're taking a non-revenue generating compliance activity, taking it off your plate, automating it with a high degree of accuracy and transparency so that you can reallocate those resources back into activities that directly contribute to growth and profitability in your business. So let's talk a little bit about how we actually do that. As I mentioned, Avalara is a cloud-based platform. So we are a multi-tenant SaaS solution for compliance globally for indirect tax. There are three primary pillars that make up our compliance solution. They are AvaTax, which is our tax determination solution, Avalara Returns, which is automated filing and remittance, and that is an end-to-end filing automation solution, which I'm going to show you here shortly. And the third piece is Avalara Cert Capture. Cert Capture is a tax and compliance document management tool. It's designed to meet the needs of B2B customers or customers with a B2B channel or line of business. So wholesale distributors, manufacturers will need to collect exemption documentation from resale customers, manufacturing customers, agricultural customers, and ensure that those documents are on file, current, and complete. This is often for a customer with a large B2B line of business, or if they're exclusively B2B, this is where the greatest potential liability and exposure in an audit scenario is actually ensuring that documentation is on hand, complete, and readily accessible. So that's what Cert Capture is designed to do. We support a growing range of tax types. In my projects that I work on directly, primarily my customers are concerned with U.S. sales and use tax and VAT, value-added tax globally. So kind of what we would think of as traditional, indirect, or transactional taxes. We have business units and functionality within our ecosystem to support lodging and rental tax, fuel excise tax, communications tax, landed cost, and cross-border transactions. And that list is growing all the time. So we are creating the most complete compliance ecosystem so that we can, A, support customers across a wide range of industries, but also give our customers the highest degree of scalability in terms of how they want to grow their business. What markets do you want to sell in? And do you have the infrastructure in place to readily meet the compliance requirements of those markets? That's all built on our technology platform. So all our engines and databases, which run off of, as I mentioned, the most complete base of taxability content available. This is maintained internally, so we do not outsource our content research or maintenance. We do it all ourselves. through an excellent compliance management team of about 300 tax professionals that are full-time working on ensuring that every aspect of our content, and you can see what I mean by content down here at the bottom. This is a lot of different data sets, a lot of information. It's consistently maintained and updated and guaranteed accurate. I'm going to talk briefly about our partnership with the SAP ecosystem. As I mentioned, my focus is primarily on SAP Hybris. From a partnership standpoint, our SAP certified extension for Hybris is part of a portfolio of integrations and products designed to meet the needs of SAP customers. That is one facet of our broader ecosystem of integrations, which includes about 580 pre-configured integrations to point of sale, order management solutions, billing, ERP, and commerce. As I mentioned, this all comes back to scalability and eliminating barriers to growth. We want customers to be able to select the business technologies that make the most sense for their business and that are going to help them scale and know that they can easily and quickly and cost effectively integrate their tax solution. And so that's what we've been trying to build over 14 years in configuring close to 600 readily available and certified integrations at this point. So once you have our tax solution integrated into your business platforms, you've now eliminated the need to rely on the native tax structure in your commerce platform, ERP, OMS solution, whatever the case may be. Instead, what's going to happen is that a real-time tax determination is going to happen at the point of order entry, sales order, or invoice generation. Also credit memos. So think about anything that's going to be impacting that tax liability or require a tax estimate. What I'm about to show you happens in about 0.067 seconds. So it's very, very, very quick. But after that, and here it says customer hits purchase, and I'm thinking about this in an e-commerce situation, but this could also apply to manual order entry within your ERP solution or generating a quote or sales order and estimating a tax amount. Once that happens, there's a number of steps. The address is validated within Avalara using a USPS database. Once we've validated that address, we confirm the location at a rooftop level and assign the relevant jurisdictions. So whether it's one state rate or a combination of 6 state rates and local rates and special tax jurisdictions, we find that all out. We look at a line item level at what products are being sold. Are they services? Are they products? Are they subject to special tax rules? And apply those taxability rules at a line item level. And then we look at how should the tax be sourced based on the ship to and ship from locations for each product. Check the exemption status of the customer. Is it a resale transaction? Is it a direct to consumer transaction? Is the customer exempt for some particular reason? Are there any tax holidays we need to apply? And at that point, we can assign a tax rate, which is logged in the business platform, and then we're all set up to manage the collection and filing and remittance for the customer as well. So this all happens instantaneously. As I mentioned, it's less than 0.4 of a second. But this is really what's going to be required to ensure that that is as accurate a tax calculation as possible for your reporting. So I'm going to jump in a second and actually show you the console itself. But just to recap, really what AvaTax is providing you is a single pane of glass, single window into your compliance and liability across multiple data streams, lines of business, subsidiaries, however you want to set this up. It's completely configurable. In this scenario, I might have brick and mortar locations, e-commerce, marketplace transactions, mobile device sales. All of this can be set up. You have full transparency into everything across your organization and the ease to actually manage it directly within one user center. And all of that, again, running on 600 integrations, our enterprise-grade multi-tenant technology, and we are a global-ready solution. So we have tax compliance for, I think it's about 193 countries today, and we've recently added Brazil. So most countries that you might be doing business in, we have the content ready to support you. So again, as you scale both domestically and globally, you have a platform in place that's ready to support those compliance requirements, no matter where you may choose to go to market. Okay, so what I'm going to do now is shift gears a little bit, and I want to show you actually how the platform works here. So I'm going to open up a demo environment. Now, one thing I do want to mention, I'm going to be doing a very high-level walkthrough here. So my intention here is to give you an idea of how you use the AvaTax tool, and then I'm happy to actually go in more detail on a customer-by-customer basis, given your particular requirements. So what I'm going to show today is basic configuration of an AvaTax account, how tax is actually calculated at an order entry level, how you access the reports and view the data, and then how the returns get filed. I'll touch briefly on exemption certificate management, but I'm not going to do a full in-depth demo of the cert capture solution. I'm happy to do that on a per customer basis, so please reach out to me if you'd like to see that tool in more detail, and I'd love the opportunity to show it to you. So I'm going to go ahead and log in here to our user center, which is our admin console. So this is essentially the cockpit where you're going to control taxability with Avalara. We've tried to make this as simple and intuitive as possible to use. There's really only a couple times that a customer is going to come into the console at all. Generally speaking, this will be running in the background. You'll come in here to do a brief reconciliation to file your returns, and if you need to make any changes to your tax policy. So if you go ahead and enter a new state, a new country, and you need to turn it on for tax calculation, or you add a new product line and you need to go ahead and make sure we understand that there are additional products that we need to determine taxability on. But there's going to be a transactions view, returns filing, and then all of the top most popular reports that our customers view are accessible with one click here. Before I go into any of that, I'm going to click on settings and show you how you actually tell the system how you want to collect tax. You're just going to run down this list during setup. So the first thing to do is to tell us, where do you want to collect? So if I click here, in my demo environment, I have a number of states turned on already. But to add a new region for tax collection, I'm going to click on this plus sign, and I can go ahead and just check the box next to the state that I'm going to start collecting tax in. Again, all of the content, all the rates, taxability rules, jurisdictional boundaries, tax holidays, all of this is here and readily accessible for you and maintained. So all you need to do is check this on. Once you've done that, you come down here and add these collection authorities. And that's it, you're done. You now have all applicable content for that jurisdiction ready to be applied at the next order that's submitted with a ship to within that jurisdiction. You'll notice here I have all US states and Canadian provinces. That's our standard North American offering. We have a global offering as well, which would include those additional 190 or so countries. I just don't have that turned on in my demo environment. Once you've told us where you want to collect tax, you're going to tell us what you sell. Now, there's a couple of ways to do this. But the structure remains the same. You're going to map your item codes or your SKUs to what we call a tax code, which is an alphanumeric code that corresponds to a product or service category within Avalara. We have 2,500 of these product and service categories. The reality of it is that most of our customers will use somewhere between 5 and 12 tax codes across their entire product line, because a great example would be Crocs. Crocs is a longtime customer of ours. They sell shoes. They could have 1,000 different colors of shoes, but a shoe is a shoe for taxability purposes. So they're going to use one code for all of those 1,000 SKUs that correspond to different colors. You can do this mapping directly in Avalara. You can do it in your commerce platform. You can do it in your ERP. So wherever it actually makes sense, wherever you're going to maintain your item master, you're going to map the Avalara tax codes there, and then that's passed to us when that solution makes the web services call at the time of order entry. So we understand at a line item level how to tax each item. So this can be done with a simple export of a spreadsheet and then imported again with the tax codes assigned to the item code. You can do this on an individual basis. If you need to add a single item, I can add my item code, my description, and then I can select the tax code. So if this is, for instance, clothing, I can type that in and I can just select a general clothing code. and I hit save, and now I've got that item code mapped and ready to apply taxability correctly based on that designation. I'll point out a couple other pieces in here very quick. We have the ability to set up multiple locations. So if you have location-based filing requirements, the ability to set up your exempt or wholesale or manufacturing customers so that we understand that they're exempt. Now, we have some out-of-box functionality right here within AvaTax. So you can manage customer exemptions right here. You can also use cert capture if you're using it for document management, and cert capture will be updating these customer exemption statuses automatically based on the submission and validation of the exemption documents through that tool. We have some company settings down here. Now, what we call companies could be anything from a subsidiary, a sister organization, or separate business units or data streams. This really just allows you to set up multi-company environments or multi-level business structures so that you can break out different subsidiaries or lines of business for reporting. Those subsidiaries can all roll up to one entity for filing, or you could have, if you have multiple sister organizations that all file under separate tax IDs, you can set that all up and manage it all under one console. And then the final thing I'll point out here are users. We have no limit on the number of users that you want to set up for the account, and you can give them varying levels of read-only or admin access. They can access specific companies or business units. You have a full configurability there. Okay, so once you have the account set up, now you're ready to start collecting tax. So it'll show you what that looks like. So if I go into the tax calculator here, and I'm gonna, if I scroll over transactions, I have a number of different tools that I can use here that pertain to transaction entry and viewing transactional data. The tax calculator is just a tool that you can use for research, or rate lookup, whatever you might need it for. I think it's a great way to simulate order entry, so that's what I'm going to actually use it for. So think of this as creating a sales order or building a shopping cart. I'm going to go ahead and select this ship to or ship from location, and then I'm going to start out here by just putting in a zip code, because this is how many of the customers, when they join Avalara, this is how they've traditionally assigned tax rates. So I'm going to go ahead and add my zip code, and I'm going to save that document detail. Now I'm going to put in an item code again. And pardon my general description here, I'm not feeling terribly creative this morning. I'm going to put in $100, and then I'm going to go ahead and save the line item. So you can see my sales order kind of coming together here. If I go ahead and calculate tax, you can see I get a rate of 7.5% based on that zip code. But watch what happens if I go back and I actually complete the address and validate it. So I'm going to go ahead and redo this. And this time I'll actually put in I'm going to deliberately leave this incomplete. So I'm just going to put 1480 O'Kelly Chapel in Durham, North Carolina. I'm going to go ahead and first validate that address. Let me put a state. First thing that happens is the address will be validated, as I mentioned earlier. So that's what I entered. It's actually 1480 O'Kelly Chapel Road in Durham, North Carolina, and there's the zip code. Now you can see here still 27713. So I'll use that validated address, and now I'll calculate tax at a rooftop level. So I'll save that document detail and recalculate, and you can see the rate is actually 6.75%. This is because even though this is still 27713, still in the city of Durham, it's actually not in Durham County, it's in Chatham County. So it's just over the county line, and it's a totally different combination of taxing jurisdictions, which leads to a different rate. So the next step here is I'm going to actually go into our transaction register. Now, this is going to show you all of the transactional data that's coming in across all your various data streams. So you can view documents. You'll see in this document status column, you'll see most of these say committed. Anywhere where you see saved, think of that as an incomplete shopping cart or a sales order, so an estimated tax amount. This hasn't been actually committed yet, meaning that that tax amount is not going to show up on your returns or on your reports because it's not a liability. But we'll still let you see those saved or estimated transactions here in this view. I'm going to go ahead and pull up, you can filter off a number of different fields. I'm going to pull up an invoice that I created previously. Now this is a general invoice with a few line items for a clothing and apparel scenario in New York, as I mentioned earlier. So we have a few line items here. You can see our tax summary, so total invoice amount, how much was non-taxable versus taxable, the total tax, and then the total invoice. I've got all my header information for the order up here. If I go down here, I'll see I have a couple items. I have a blazer, a tie, and a freight line for shipping. Now, the blazer and shipping are both taxable, the tie is not. And this is because of that $110 threshold that I mentioned earlier. So you can see if I actually click this button over here, I can break out the actual tax detail for each line item. I can see the specific jurisdictions that are in play at this ship to location. So here at this location, I have New York City tax, New York State tax, and then they're also within the Metropolitan Commuter Transportation District. So that's an additional tax percentage here. If I break this out, for the tie, what I'll point out is that both of these line items have the exact same tax code mapped. They're both mapped to the tax code for general clothing. But we know based on that specific ship to location and this category that since this line item is under $110, it's non-taxable. Since this one is over $110, it is taxable. And so we're applying that rule. If I were to change this ship to address on this invoice to my home address in North Carolina, that additional $50 would also be part of the tax base because that's going to be taxable at my location. We have no such special tax rule. Okay, so as all this information is flowing through, we're going to be able to go ahead and actually complete and file your returns for you. So that's the next thing I'm going to show you. So here in the Returns tab, when you set up your Avalara account, you're going to come into All Returns Scheduled, and this is where you can see the returns that we have set up in the account that Avalara is filing on your behalf. I can go ahead and easily add a return if I add a new state or as I'm setting up the account initially. So I'll click on this plus sign, and this is very easy. All I need to do is select the region. So let's say I'm adding California, and I can actually see here visually the available forms that Avalara has stored and ready for me. So I can go in and I can say, okay, you know, here's the actual form. I can confirm, yes, that's the form I typically file, and I can go ahead and hit use this. And Avalara is just going to ask me for some information that we need, such as my e-filing login information for the state e-filing system and basic business information and anything required to complete that return. Once that's done, I hit Save Filing Settings, and now Avalara is set up to file and remit that return on my behalf. On a monthly basis, on this month's return filing. And I'm going to go in, normally you would just be looking at the current month. I'm actually going to go back to June because this is a demo environment and I think that's easier to look at a quarter end here. So I'll go back to June 2017 and I can see a summary of my filing here, all my total sales, my total tax calculated, and the amount due to Avalara here. I can see each individual state and a breakout of the returns that I'm going to file, the total amount for each state. And then I can go ahead and approve these individually or make adjustments as needed. But the important point is this number up here. What happens is no matter how many returns you're filing, you're going to have one single payment directly to Avalara each month. And this goes back to that analogy with payroll outsourcing. So this is this one single amount that we need from you to fund your liability and pay your returns. Most of our customers do this through an ACH debit pull. So we'll pull those funds and then we'll take over from there. We will complete all the forms, file the returns, remit the payments. So you have one simple journal entry for that single sales tax payment each month, simplifies that process, and it's all guaranteed to be filed timely and in the correct format. As your returns are filed for you, we will archive all of those completed returns here in the returns history. We guarantee that we will maintain this information for up to 8 years, which is the maximum look back period. We've been in business for 14 years. We've never purged our data to date, but we do guarantee what it says in our contract is that we'll maintain all of this information for our customers for 8 years. But you can always download the actual completed returns as well as the payment confirmations, which we will, the proof of payment, which we'll maintain for you. So you can download those as a zip file and get a PDF of those completed returns and proof of payments if you want to store those locally as well for any prior period. The last thing that I'll point out on the return side, and then we're going to wrap up the demo portion here, is the tax notices tab. So as I mentioned, we do guarantee these returns. So we have a timely filing guarantee in our contract, and we do guarantee that the returns will be completed in the correct format. So in the event that you receive a notice from the Department of Revenue for a particular state, if it's a return Avalara file for you, you simply provide that notice directly to us, and our compliance team will interface with the Department of Revenue and resolve the notice on your behalf. You can track the status of that notice resolution here. I don't have any active notices in my demo environment, but you can see we'll give you updates on the status, the relevant tax period, et cetera. And the last thing that I'll show you before we conclude this portion is the Exemptions tab. This is where you would go in to just create a record for an exempt customer. So you can go in, you can see for this particular customer, Steel Inc., I have 10 active exemptions. I can view what those exemptions actually are. So the relevant states, the reason for the exemption, and all this is telling Avalara is when you see this customer number in this jurisdiction, that tax is exempt for this reason, so we can treat it appropriately. If I am using cert capture as well for document collection and storage, I can actually view the completed tax document right here in Avalara. So I can pull up, there's my completed exemption certificate if I need to access it quickly. Now there's also very robust reporting within cert capture to access and view your exemption documentation. And again, for any customers viewing this for whom that's a large part of your compliance burden, give me a call. Let's hop on another call and we'll go into cert capture in more detail and show you some workflows. So that's everything that I wanted to show you as far as the actual console today. So what I'm going to do is hop back to my presentation here in just a couple points, and then we'll open things up for any questions that anyone has. Very briefly, just a little bit about who we are as a company. We have been around, as I mentioned, for 14 years, and this is a little summary of our growth in that time. So we have about 20,000 customers today that have selected to partner with us to outsource and automate their compliance. They are using 600 integrations, depending on their business platforms. We're constantly partnering with and acquiring and developing new technologies to build out this scalable compliance ecosystem that we're building. So here's some of the tax type services that we're able to provide our customers with today. We have 1,500 customers that are employees. As I mentioned, we're spread across 15 global offices today with our corporate headquarters in downtown Seattle. So just a little summary of kind of who we are as a company there. Our customers run the gamut from small office, sole proprietor, up to Fortune 500 global multinational organizations and across a wide range of industries. One of the things that I think is so cool about Avalara and our technology is that we have, as I mentioned, the small home office customer using platforms like QuickBooks, all the way up to Fortune 500s running big SAP ecosystems with lots of subsidiaries, very complex compliance requirements. What's really unique is that all of those customers are using the same product. They're using the same AvaTax solution across that entire spread. And I think that's really cool and pretty unique. So our product is simple and intuitive enough for that small office, entrepreneur, sole proprietor to use effectively, but it's robust enough in its feature set and its configurability to meet the compliance needs of some of these very, very large, very complex customers. And I think that's pretty cool. In the hybrid space particularly, we've had a lot of wonderful projects in the last few years. These are some of the customers that we worked on and had done very successful projects for. So for anyone viewing this, I would love the opportunity to earn your business and add your logo to this list. So again, thank you very, very much to the team at Dunn for giving us this time and hosting this. We're thrilled to partner with you and look forward to many great projects together. This is my contact information. So please connect with me. Feel free to call me directly. and I'm happy to answer any questions. But Megan, that's all I had, so I'm happy to turn it back to you and answer any questions that anyone on the call has.
Awesome. Thank you, Cory. That was a great presentation. Very interesting demo. It does look like such a simple to use platform, but definitely very robust. Anyone that has questions, you can please type those in now, and we'll stay online for a few minutes to cover any of those. Otherwise, thank you all for joining us today, and thanks again, Cory, for your presentation. We hope to see you all at future webinars, and keep your eyes peeled for the follow-up link that will have the link to this recording in your email as well.